Hi, thanks so much for joining in. You're watching BQ Prime, and my name is Alex Matthew. At the onset, let me wish you and your family a very, very happy Diwali and season's greetings to every one of you. Now, when it comes to the celebration of this festival, it obviously is a time that you spend with your family and your friends, but we think it is also a time that you should spend thinking about your finances and utilizing this time to reflect on the decisions that you've made over the last year and to prepare yourself for the new year. With that in mind, let's talk about mutual funds specifically, and let's talk about the strategy that you should employ heading into the new Samvat. Joining me on this conversation is Shalini Sekhri, the Chief Executive Officer of Infinity Asset Advisors, as well as Kshitiz Mahajan, the Managing Partner and Chief Executive Officer of Complete Circle Wealth Solutions. Welcome to the both of you, and season's greetings to you and your families and your teams as well. Shalini, I'll start with you. The first question, what according to you is the biggest theme if you were to talk about the mutual fund industry and what played out in Samvat 2079?
Hi, Alex. Thanks for having me. Always a pleasure. Samvat 2079 has been a roller coaster ride. The bulls and the bears ending in an even tie with 6 all. Sensex delivered positive returns for 6 months and negative returns for the other 6. For me, I think the biggest highlight was how wrong the economists called it. Rather than a hard landing, we are seeing exceptional numbers both out of the US and, of course, India as well. I think from a market perspective, for me, the top highlight was that the last 1 year has been a fantastic performance of the small and mid-cap stocks and therefore mutual funds as well. So while the Sensex returned a pretty modest 6%, mid-cap and small-cap indices have returned an amazing 24 and 30% respectively. So for me, it's really been, the year of the small and mid-cap companies and mutual fund schemes.
Okay, fair point. So that, according to Shalini, is the biggest theme. What, according to you, Kshitij, was the biggest theme of 2079?
So happy Diwali, Alex. Hello, Shalini. Happy Diwali to you, to Alex, to all the viewers of BQ Prime, to all the colleagues. So it's a great year, I must say. And for me, the biggest highlight. We will come to the funds, but the biggest highlight is the retail participation, retail investors who have held their nerves when markets were not being very supportive, who have kept on participating through SIPs, and we have seen a remarkable journey through retail participation where we have seen unique folios crossing 4 crore, unique demat account crossing 8 crore. We have a unique SIP book now of almost more than 2 billion, which is a very, very remarkable thing. For me, I think industry is moving in the right direction. We are now almost 3.5% plus participation from people in equities. Seems like that what happened in the 80s for US, where the participation in equities from 2% has gone to 44%. Maybe this is India's time, where we might see participation from retail participants.
As we stand on the precipice of a new year, there are a lot of question marks about how things will pan out. And I think some of the predictions that we'd made at the start of the last Samvat have not really panned out the way that we expected, particularly in terms of the global scenario. A lot of things have panned out. So let me ask you, as you head into the new Samvat, Shalini, and then I'll come to you as well on this, Kshitij. What advice are you giving to your clients? Is it that they need to take this opportunity to look at their portfolio and book some of the gains that they have made? What, according to you, is the key theme to watch out for in the new Samvat?
As we go into the new year, Alex, we believe India will continue to be a shining star amongst its global peers. I think, there are a lot of estimates that India will be the third largest economy by 2030. And if all of this comes to pass, which we are very positive about, we genuinely believe that the place, to continue to be and to add is in the equity space. From a more shorter term perspective for this coming year, we believe, and I think this to some extent is contrary to the street, that mid and small caps will continue to extend their gains. We continue to see fantastic returns, from there. And we don't believe that we are anywhere in a bubble zone, which is what we're hearing from, some of the other market participants. So we believe that this is the year, in fact, the next 5 years is the year to make supernormal gains from equity as an asset class, continue to add through SIPs, Every correction that comes in should be used as an opportunity to buy further. In fact, I personally love corrections. I feel it builds an extremely stable base for the next leg of growth. When there is only a run up, I mean, there's generally bad news ahead. So I think being able to build on the back of worries to climb the wall of worry, and I see so much skepticism whenever we talk to clients. But that makes me pretty positive because I think rallies are built on skepticism. So I believe we are still at the young stages of a bull rally. It's definitely not a mature market yet. So lots of excitement ahead. Gold is another asset class, surprisingly given 21% in the year that's gone by. And we think it could be a great asset allocation strategy as well for clients who want to de-risk a bit. But I think this is the time to, take in all the risk appetite that you possibly can, all the money that you can put aside for the next 4-5 years. And we are 100% sure that markets will not disappoint us.
Oh, fantastic. And very important point that you made on gold as well. I was looking at it, 21, 22%, Kshitiz. And this is beating certain asset classes handily. It certainly beats the Nifty 50 by a big margin, right? And the other aspect, of course, that has been pointed out is that if the dollar corrects or the dollar comes off, then the focus comes back onto gold as an asset class and gold gains. Let's also talk about what you think is the key theme to watch out for in the new year.
So, Alex, you very well stated this, because it seems like if we have our bond index now, it's a part of JP Morgan bond index. And next year you might see 25 to 30,000 crore of inflows, and that might impact rupee in a positive way. And you're right that might take away some shine from the gold. So coming back to themes, what we are looking at on a broader side, one is the housing theme, Alex, which we are very bullish on. And housing includes a lot of sectors. And I think government focus on, house for all, overall being people are getting upgraded through the GDP, increase, through the income increase. I think COVID has also led to this mindset change of people to have the right set of home, because they have realized that they might have to spend more time at home, and that mindset change is there. So you see that people don't mind spending money on upgrading themselves, and they are good to spend 10-15 lakh on their kitchen, or let's say on washrooms also. So I'm saying housing is a thing which includes broader sector. This is a broader sector. Then we have cement, steel, pipes, tiles, everything coming, toiletries, everything coming there. So that sector is one sector which we really like. Then second sector is an energy sector, where as a house we feel that clean energy is the way forward, and companies who are working on that, it might create a lot of vibe and positivity for those businesses which are working on that, not only in India but outside India. So we're looking at a clean energy where we're playing on stories on the ethanol side, on EV side. We are playing on the stories on auto EV side. So there are many businesses on which we are very positive on the clean energy side. Third thing which we are looking at a manufacturing side. And we very strongly feel that manufacturing might end up contributing 25 to 26% to the overall GDP in the next 4 to 5 years time. And I think Made in India campaign has actually led, China plus one advantage is always there. So you see more global giants coming to India, and what better than India, which can offer, young population as a workforce also. So we are looking at that manufacturing theme also in a very big way. Then obviously financial inclusion, which is one thing which is broadly a very positive theme, which we spoke in the first question itself, that you have seen that financialization of saving which is happening, and that can be looked at through various businesses, whether banks, NBFCs.
Absolutely, and a lot of avenues for growth. Let's talk about the mutual funds that you have liked and that have outperformed. Shalini, what stood out to you over the last year, and do you think that will continue into the new year as well?
Right, Alex. So if I look at three broad categories that I was doing some analysis on, I think standouts for me have really been the mid-cap, small-cap fund, and the multi-cap fund categories to some extent. Some of the best performing schemes, for example, if you look at the small-cap space, HDFC, Nippon, Franklin, all given 30 to 33%, 33, 34% in the last 1 year. When I look at some of the small-cap names the mid-cap space, there's HDFC, Tata, Nippon, all of these guys have returned between 25 to 28%. And even the multi-cap performers, it's not been shabby at all. So between, say, Kotak, Axis, HDFC, we've seen returns in the region of, say, 23 to 25%. So all of these categories have been pretty stellar.
Okay, what stood out to you, and do you concur with this, Kshitiz? What are the key themes that you liked? You've already spoken in terms, not themes, sorry, the key funds or schemes that you liked that outperformed over the last year.
Right. So what as Shalini presented in the first question, that mid and small cap have done really very well in last 1 year, and obviously last 3 years return you actually see it looks almost in excess of 25% for small cap in most of the funds. So I see that right now, if somebody want to invest, moreover, I will not advise anyone to look at from Diwali to Diwali investment, but at this time, where markets, are almost close to peak, and you might talk about the valuation side, I don't see that the broader index has actually done, most of the constituents have done well. If you see HDFC, Reliance, or IT Pack, or let's say, for that matter, Kotak, so almost 50% plus pack has not really done well on the Nifty side. So I see that rather than playing through a individual category cap fund, let's say small cap, mid cap, one can look at playing through a flexi cap fund or a multi cap fund or a focus fund. That's a better way of doing it, because there you get almost, depending on your risk appetite, you get exposure into other categories also. So that's a better way of doing it. And my strong, that's what I feel, and we believe that large cap will do really well. But I will not advise anyone to go for a pure large cap fund. You should have a mix of a multi cap or a flexi cap or focus funds. Across categories, I think in these three categories, except for flexi cap, where you have Parag Pari has done well, but multi-cap, focus, and large and mid-cap HDFC in last 1 year, their performance is low. There are no recommendation. I'm saying just how they have performed. The portfolios are very well poised. If you see the top holding for these funds, which I mentioned, they have HDFC, Reliance, ICICI, Infosys. Most part of the portfolio they have not done well, irrespective of the performance is good. So I'm saying that it looks good, that one should look at participating, and the right way to do it is through STP and SIP.
You've kind of answered what was going to be my next and my last question, which is what you should do from now on. I will throw that question to you, Shalini. You've spoken about the schemes that you liked over the last year, and I did kind of ask you whether that will continue into the new year. You've already answered that. So from that perspective, what advice would you give to somebody that's building out a portfolio or looking to adjust or tweak their portfolio around this time?
Right. So I genuinely believe, like I said, that we're in a very young bull market, and risk reward, which are the two factors that investors always keep in mind. If I were to weigh that at this point of time, I would safely say that in the risk reward equation, it is very much in the favor on the side of reward, which means that the downside from here, while it is possible in the short term, the potential for upside is as it has not been for a long time. So I believe that, yes, asset allocation, very important. We discussed gold. In fact, another asset class we did not touch upon is real estate, where we have seen, in fact, the reality index has been the best performing sectoral index with a 44% return. So clearly, I think there will be return in multiple asset classes. I think I'm personally biased, but perhaps to equity because of its liquidity and various other benefits. Investors should keep building their equity as and when they can spare long-term money, but do look at an allocation of maybe 10-15% to gold if you do not already have that. For various reasons, which I will not enumerate now, we do believe that there will continue to be a run-up in gold. So that's really my 2 bits on where here from now.
Okay.
So jump in, grab the golden opportunity. That's what I would say.
Okay. So Kshitiz has already given us some of the schemes that he likes. Would you like to name a few schemes that you like from the categories that you mentioned?
So I think the ones which have been consistent will continue to keep performing. So in the mid and small cap space, it's the usual suspects, well-managed, large schemes. So we are seeing, HDFC, Tata, Nippon, Franklin. These are some of the ones that have schemes which have not just delivered from last Diwali to now, but if you look at their 3 or 5 year track record, they're looking pretty good. I think even in the hybrid category, actually, if you can look at, say, aggressive hybrid funds, you've got some good schemes, say, from the ICICI Prudential basket, Edelweiss. The UTI aggressive fund is looking pretty good. Again, I must say that past performance is not indicative of the future, but if I look at a 1 year, 3 year, 5 year track record, the kind of stable fund management teams they have, I mean, I would think that for, on the margin of safety, these would be good names to go with.
Fantastic. Kshitiz, as well as Shalini, I've had a fantastic conversation, and I'd like to wish you once again, both of you, a very, very happy Diwali and a very, very happy New Year as well.
Thanks so much, Alex. Wish all your viewers and everyone in the studio the same as well. May markets reward all of us with wealth and prosperity in the new year. Thank you.
And to you, dear viewer, thank you so much for tuning into this conversation. Hopefully it helped you crystallize some of the thoughts that you might have been having with regard to your investments. But do remember, the most important aspect of investing, not just around the Diwali time, but through the year, and in fact, through the rest of your journey, is consistency. Do stay tuned. This is BQ Prime.